UAE founders specifically, and those who belong from India as well. Because today we are going to speak about simple portfolio investment, how you can create your portfolio. And I know everybody knows what asset classes are, where you can invest, but still we are missing our goals. We are not disciplined with our investment. Our investment framework is mostly emotional rather than following a typical logical framework. So every and why that happens is also I have tried to cover in my today's presentation. So let's get started. Number one, if I speak about all the UAE founders and founders around the world, but today is about UAE founders, everybody is running a business. Their 100% focus is always on the business. They're managing a team, chasing the clients, sales. So do they have time to be a full-time investor? That is a question first which we need to ask ourselves, being founders of the company. Do we have time to create our own framework and focus that? Sorry, creating a framework is what we want, but do we have time to focus on the investments regularly, or we want a framework which in turns brings us maximum return with a moderate risk? So if I have to speak about how we can create that kind of framework so that our investments give us maximum ROI. But before that, let's understand why we overcomplicate our investments to get some little bit extra returns, maybe 1 2 3%. But again, to get that 1 2%, we are losing our focus in our business, in our other works, just to get that little bit edge, and which often we also don't get, but rather we lose more because of the emotional angle which comes in between your investments. So number one, complex portfolios. Whenever you try to make a complex portfolio, let's say adding more cryptos, watching out every day crypto trading, or any other aggressive asset class. Let's say you are putting all your eggs in residential market of UAE, or you are putting all your eggs in one stock of US market or Indian market or any other market. That is a complex portfolio and needs a constant attention. Your emotional stress also goes up and down whenever the market is moving up and down. So don't create those complex portfolios. Number one, more decisions. Again, when you create portfolios which are so complex, which are dependent on your decisions are more, and you tend to take those decisions emotionally. So don't create again complex portfolio, because in turn you will require to put more of your time and effort to take the decisions of those portfolios. Now, simple portfolios give you consistent returns and have always outperformed the complex ones. If I speak about Warren Buffett's quote, typically an ETF and index investing is always beating a mutual fund or an active investor in long term. This is by far the data which is available. You can check that index investing almost gets you the same level of return. So anybody promising you that I do active investment, I can put your money in stocks, get you 40% return, I mean, I don't think so that's worth it. And that is proven by many experts. The best strategy is the one which you actually stick to. Now, these kind of people or these kind of portfolio managers who are telling you to get the aggressive returns, be it PMS or whatever it is, they will tell you, and your mind will always be stuck to that person, and you will keep on changing the strategies. But actually your investment framework should be like which you can stick for 5, 10, 20, 30 years without looking at that. Set it up once, automate it, and just check quarterly. That is the right framework to follow. So this is what has been covered. If I speak about the four asset classes which are typically serving different purposes all together, and we are always mixing it up. So when we speak about business equity, which is your company, so being a founder, your money in your business is your business equity, and that's your asset. Yeah, emotionally you're the founder of that company or the business owner, but in personal terms, your equity, your valuation in the company is your asset. That has the highest risk and highest return as well. There is no doubt about that. So whenever I speak to a business owner, they will say, if I put 10 million in my business or 1 million in my business, in 1 year I can get 50% return. True, but that same 1 million you can lose as well 50%. Plus it requires 100% of your time. So that's a different ball game altogether. This asset class of business equity demands highest time, highest risk and highest return. So this should be, let's say, 60% of your portfolio, 50% of your portfolio, but not the whole portfolio should be dependent on your business equity. Now moving on to UAE real estate, Dubai property. So this is more of a stable asset which gives you stability, physical asset which gives you rental yield, appreciation plus a stability in your portfolio, because it is not about getting highest return all the times, but it is about getting your safety net as well, your fallback option as well. And I'm not talking always about the off plans, but mainly physical asset. When I say in secondary terms as well, that you have the asset in front of you, it is getting you a rental yield as well by paying 20 has been paid up. This 50 portfolio exists, has a UAE real estate asset class in the portfolio. Now, next one is US ETFs. Why I say put a stock market liquid asset in your class? Because tomorrow anything is happening, you are leveraging every possible thing. Now, if your business is having problem, you will go to bank. You are already leveraged with the bank. You cannot go to the bank. UA real estate, you have take if you have taken off plan, you will pay 20% and 80% you will be paying through your money which comes from business. Then if you have taken mortgage, again your EMI depends on the salary which you are making from business. So everything is already highly leveraged from each other. So US ETFs or any other stock market investment which is safe, again not the stock directly, I'm always speaking about index or mutual fund as the worst case. This gives you liquidity in your portfolio. So if you are putting 10 million in your business, 3 million in real estate, then at least 1 million should be in ETFs, which also give you almost 12% return, but it is highly liquid, unlike your UAE real estate or your business equity. So if you need the money, your best case choice is your ETFs, your money in the market. If the market is little down as well, but you can still liquidate it. But real estate to liquidate it, it's not easier, and for business liquidity it's completely not easier, it takes time, right? So that is why ETFs are very important. Then again, Indian mutual funds, and I always speak about keeping cash and FDs of around 5 to 10% as well. So follow this framework so that you are not highly leveraged. And this is the same numbers which I have told you: 40% ETF, 30% real estate, Indian mutual funds, and cash liquid. This is from the 50%, other 50% from your other than the business equity which you have. So if your total net worth is X, 50% goes to business equity, the rest 50% should be divided in these asset classes for sure, in terms of your personal wealth. This is very important. Now, I'm not a financial advisor. I'm just giving you a framework as a founder, because I mean, I can put up some of the credentials. I've done my own financial. I'm a CI, qualified investment banker, but still I don't say that I'm a financial advisor. But I'm a founder and I understand the risk which we all are sitting on. Don't mix up your business investments with your personal investments. Keep the portfolios very clean and follow this framework so you get maximum benefit out of it. If you want to know more about UAE commercial real estate, what benefits you can get, you can go to my live and watch that. I have covered that recently only. If you want to know more about ETFs, what kind of returns it can give to you, again, you can go to my YouTube channel, Business Banking and Beyond. There you can see. Thank you so much for joining today. Looking forward. If you have any questions on my live, you can post on my LinkedIn or YouTube channel. I'll be happy to answer. Thank you.